Financial markets in turmoil.
What are the root causes of the financial crisis?
The dollar losing value.
Heading for its biggest loss in nearly 3 decades.
Will Social Security even be there?
I don't know.
Buy or rent?
That's a very good question.
Interest rates.
I'm not so sure.
Where do you put your money?
I don't know.
Welcome to the show that answers your questions. This is Follow the Money Weekly with your host, economist, and best-selling author. Here's Jerry Robinson.
Greetings, friends. Welcome to this week's edition of Follow the Money Weekly. So glad that you're joining us. Well, we have a whole lot to talk about today. Of course, the elections are just right around the corner, and the market just kind of seems to be holding its own after a big, sharp decrease that we saw just a few days ago. We'll talk about that here in just a minute. We'll also talk a little bit about the congressional approval rate of the American people and how they just keep voting in the same people. No matter how much they don't like Congress, no matter how much they don't like the direction of Washington, they just keep putting the same people back in. Well, I don't need to tell you, friends, that the level of danger that is facing humanity right now on so many levels is literally off the charts. I don't say this to alarm you. I say it to alert you. And I think you, as well as I, know that these are very dangerous times. It doesn't matter if we look at the geopolitics of our day and see what's happening between Russia and the Ukraine, or what's happening between India and Pakistan, or what's happening between China and Japan. I mean, the flashpoints are all over the place. The Koreas, the United States and its Asian pivot, and we can go on and point. Of course, we're leaving out entirely the Middle East and ISIS. I mean, there are just so many issues confronting us from a geopolitical level. And then, of course, there's the economy. And if you've had a chance to read through my book, Bankruptcy of Our Nation, you are intimately aware of the frailty of our debt-based monetary system. America and its economy is a house of cards. Don't believe the spin. Don't believe the Federal Reserve. Don't believe your IRA or your 401k statement. Friends, you are living in an illusion of prosperity that has been made possible by the world's greatest monetary experiment in recorded history. You see, back in 1971, as many of you know, President Richard M. Nixon permanently ended the final vestiges of the international gold standard. And now it should be no coincidence that the global economy appears to be going off the rails some 40 years later. Now, back in 1980, America was the world's greatest creditor nation. It's hard to believe, but just a brief 35 years ago, America was on top of the entire global economy. And it was in that environment that the U.S. dominated the world. It had very few monetary constraints in the fact that it had the reserve currency. It still does. But we have seen a slow demise and a slow erosion of that ability over the last several years. But back in these days, back in the early 80s, after the petrodollar system was put into place in the early 1970s, America was just the go-go 80s. I mean, it was just a good time, and America could easily engorge itself back in these times. But now, some 30 years later, America's status has fallen. No longer is it the world's top creditor nation. Instead, now, if you can believe it, through its excessive borrowing and consumption, just 35 short years later, it has become the greatest debtor nation in world history. Now, that may not mean much to some of you because America does seem to appear okay on the outside. I remember sitting in a vehicle. It was a very nice vehicle. It was a very expensive vehicle, but the vehicle had no engine. And so as you sat in the vehicle, you felt very nice and felt very luxurious and thought, oh, this is great. But that car wasn't going to go anywhere. And that's how it is when you're living in a declining empire like the United States. Everything looks good on the outside, right? I mean, it appears that everything's going to be okay. If the Fed can just push a little more money in, or if we can just get the right person in office. And boy, are you going to hear that when we move into the 2016 presidential debate. Ad nauseum. Now we're talking about a Bush versus Clinton ticket. Are you kidding me? Can you believe it? It's almost time, friends, to hop into the boat and go down to Mexico at this point. A Bush-Clinton runoff? Are you kidding me? This is insane. This is insane. And I've already heard some of the commentators saying, well, you know, Jeb Bush is not too bad. I mean, he's pretty... You got to be kidding me. Then why in the world are people continuing to complain if they keep doing what they keep doing? You know that old saying, if you keep doing what you've always done, you're going to keep getting what you've always got, right? If you want something you've never had, you got to do something that you've never done. And if we keep putting the same bozos into the office, in the White House, Congress, and we expect a different result, well, that is known as insanity in some circles. And so we don't want to do that. We don't want to be guilty of that. And that's what we're going to be having to deal with. I'm already beginning to make my plans, preparing my mental state, my fragile mental state for the obnoxious debate that's going to go on. And many of you in our listenership, you know, back in 2012, the majority of our listeners were on board until we got real close to the election. Then several of our listeners became very pro Mitt Romney. I mean, it was just pro Romney. Romney's going to win. Romney is who we need in office. He's God's pick for America. I mean, all this kind of stuff that came out, and the media just used it to get ratings, and the people were completely manipulated. And now they're nowhere to be found. You can't find anybody to defend Romney now, right? It's all a game. It's all a game. It's just a game. And what's so sad about it is that America is playing this game on the edge of the cliff. It's bankrupt. The only way that the United States can afford to pay its bills is by borrowing money from other countries. Did you know that's true? Did you know that the United States cannot fund its spending without foreign nations? Did you know that? If foreign nations decided to stop financing America's morphing debt, the government would not be able to afford the benefits and the military and all of the other things that it doles out and provides, not only for the United States, but for much of the world. So some Americans find some sort of strange solace from a world gone mad in the knowledge that America's military might is the largest in the world. If you look up on the web about the different sizes of different militaries, you can take comfort in knowing that America has the largest military in the world. That's certainly true. But let me tell you something else that's true. It's equally true that the United States finances its military prowess with money borrowed from other countries. So what happens if America's bankers, i.e. foreign nations, suddenly are unable or are unwilling to continue financing America's vast global empire and military machine? This is what's so concerning about some of the language that we hear coming out of the BRICS nations now. There is a new Cold War that's brewing that will inevitably turn into a hot war. There's no doubt about it in my mind that America will reach a point of military conflict with China. That buildup is currently occurring right before our eyes. Same thing with Russia. Now, the Russian military, although they have a massive number of nukes, more nuclear weapons than we do, it's the Chinese army that's a little more alarming. You see, the Chinese army knows that we cannot afford our army. They know that we cannot afford our Navy or our Marines or our Air Force without them, because they are the ones that help finance our out-of-control spending. Let me ask you a question. Those of you who have bosses at work, right? You walk into the work and you have a boss and maybe he doesn't like you very much, or maybe you don't get along with him. How would things change if you were responsible for paying his mortgage? Let's say that you were going to pay his mortgage every single month. You think he would treat you a little differently? You think he'd be a little nicer to you? Well, probably. Of course, you would hold in your hands the ability to stop paying his mortgage, and that would be something that you could hold over his head. Unfortunately, Washington has put us in a place that is very similar to that, in the fact that those empires that are rising around us have far more power over us than we may realize. And the Chinese military is very smart. They are not attempting to outspend the United States of America on military weapons and military arms and all of this. Instead, what they are doing is they are closely examining America's current military and its current firepower and its current abilities and its current capabilities. And they are, in essence, beefing up their military in such a way to exploit our weak spots. So I would urge all rational Americans to not put too much hope, faith, and trust into America's military might. Although it's bigger than anyone else's, it also requires the financing of foreign nations to maintain it. But those are all just symptoms of the deeper problem facing America. America's economy will never truly be healthy until our failed monetary system is corrected. It lies at the root of all of America's economic challenges. The dollar itself has no backing. It is a piece of paper that has no intrinsic value, and one day, as always happens throughout history, the people of America are going to lose faith in the financial promises of Washington. If the monetary wizards at the Federal Reserve and at the U.S. Treasury Department were truly interested in saving America's economy, they wouldn't be worried about more bailouts. They wouldn't be talking about more quantitative easing. They wouldn't be talking about tapering and interest rates and all of this, trying to nudge the economy towards a sustainable economic recovery. Instead, if the Fed or the U.S. Treasury wanted to truly solve America's economic problems, they would address the obvious failures created by our global fiat currency system. They would admit that our currency needs some sort of backing so that the entire world doesn't have to rely upon faith in Washington, but instead upon the backing of the currency. But that's like trying to get a criminal to put handcuffs on himself. They're not going to do it. The criminal's not going to put handcuffs on himself, and the Fed is not going to place limitations upon itself. It doesn't want to be able to print only if there's enough gold, right? Likewise, Congress doesn't want that either. They don't want to have to be restricted by the amount of gold that America has. You go back in history, that's what we found. When currencies were rooted in some sort of metal like gold, that's why you had the great conquests of the 1500s and 1600s, 1700s, the age of mercantilism. When the great navies of old would go out and conquer a nation, what they would do is they would take the nation's gold, and by so doing, they could expand their own monetary supply, thus boosting their own prosperity at the expense of another nation. But today, we've gone completely away from that. Now, it was many months ago whenever the Fed first announced, suddenly, its intention to begin tapering its trillion-dollar quantitative easing program. And at the time, I personally didn't believe it. You might recall some of those shows, whenever the Fed mentioned this, I said, I just don't know how the Fed is going to actually be able to stop pumping money into this economy, because it's sick as it is. It's not growing the way that it should. And the Fed has no other tools at solving this except pumping more money into the economy and keeping rates perpetually low. But the Fed did indeed begin tapering. Month after month, the Fed methodically cut its initial monthly $85 billion cash infusions by about $10 billion a month. They kept slicing them by about $10 billion a month. And now we have reached what is being called the end of QE3. That is at the end of the October Fed meeting, which takes place October 28th, 29th. The Fed is supposed to announce that it is going to be ending QE3. And as that closing day draws near, the volatility in the global markets is picking up. And in fact, global markets have been getting rocked as of late. Is it a coincidence, by the way, that in the same month that the Fed is planning on cutting its massive $1 trillion per year lending program to the U.S. federal government, that at the same time, the same month, the IMF issues a bleak warning over the future of the global economy? Just think about this here on the timeline. September 17th, in a prepared statement, the Fed confirmed its decision to make the final bond purchase of its massive QE3 program right after its October meeting. That came on September 17th. Then on October 8th, the IMF, who is, for all intents and purposes, intimately tied to the Federal Reserve and to the same banksters that run it, the IMF reports a bleak future for the global economy in its October 2014 Global Financial Stability Report. This sends stocks falling. And on October 15th, after falling for several weeks, the U.S. stock market experienced its sharpest intraday decline in recent memory. Now follow me here, because later that same day, October 15th, during an interview on Bloomberg TV, the St. Louis Fed president, James Bullard, becomes the first Fed official to publicly push for an extension of the Fed's QE program. We actually have a brief clip of this interview here. Let's go ahead and roll the tape.
Inflation expectations are dropping in the U.S., and that is something that a central bank cannot abide. We have to make sure that inflation expectations remain near our target. And for that reason, I think a reasonable response of the Fed in this situation would be to invoke the clause on the taper that said that the taper was data dependent, and we could go on pause on the taper at this juncture and wait until we see how the data shakes out into December.
In other words, continue with QE.
Continue with QE at a very low level as we have it right now, and then assess our options going forward. So I think, you know, if it was just me on the committee, I'm just one person, but if it was just me, that's one of the things I'd think about at the upcoming October meeting.
Well, as you can imagine that, the market loved hearing a Fed president, in this case James Bullard, making the case that QE should not be ended at the end of October, but perhaps extended until we have more data. So that happened on October 15th at the very lows or bottoms of the recent correction in the markets, this big pullback. And then the next day, October 16th, in a Reuters interview, another Fed president, this time from San Francisco, John Williams, made a statement. I don't have an audio clip of this, but I'll just read it to you. It says, quote, "If we get a really sustained disinflationary forecast, then I think moving back to additional asset purchases in a situation like that should be something we should seriously consider." Unquote. So my thesis here, and this could be off a little bit, but I'm just kind of making this interesting assessment here that it appears that the IMF's global market downgrade was extremely well timed, because it comes just as the Fed is getting ready to turn off its quote-unquote QE3. And if the overall global market is slowing down, then this has given, and in fact the IMF themselves have given the Fed the perfect excuse for keeping the printing presses on. And if that is exactly what's happening, then it's not a surprise. Let's face it. The Fed, the IMF, these powerful financial institutions, they're corrupt. They're corrupt, and it's very well documented. The Fed, by the way, is run by extremely well-connected and wealthy banking elites who live and breathe in the toxic and corrupt environment that permeates the upper chambers of America's financial industry. Their motive is profit. It's just business. And meanwhile, over at the House of Representatives and in the Senate, lawmakers have been encouraging an increase in the level of foreign debt purchases by foreign countries. How come? Because the Congress is too busy spending money to be bothered by pesky spending limits or debt ceilings. So in a classic kick the can down the road fashion, the U.S. Congress has spent the majority of 2014 spending inconceivable sums of the people's money, propping up our warfare and welfare state while promising to get to that inevitable debt ceiling debate sometime in March of 2015. Now, if you're a longtime listener, longtime reader to many of our things that we do here at FTM Daily, you are keenly aware that I am a political atheist. Not an atheist, right? A political atheist. I view the 535 voting members of the U.S. Congress, 435 in the House, 100 in the Senate, as little more than well-mannered, well-spoken, and extremely well-paid professional fundraisers. That's it. In order to gain one of those 535 highly coveted seats in Washington, your fundraising skills and your ability to play the media must be exceptional. I mean, think about it. Politicians, their entire career is spent in a constant quest to raise more money, either for themselves or for others in their party. And over the years, I have developed very little patience for the modern theatrics of the political process. Politicians are often accused of saying one thing and doing another, and yet, even though that is the case, the American people continue to vote these same politicians right back into office. It is truly the theater of the absurd. There is, by the way, a brand new CNN poll I'm staring at right now. It says nearly 7 in 10 Americans are angry at the direction the country is heading. And 53% of Americans disapprove of President Barack Obama's job performance. So 70% of Americans are angry, quote unquote, at the direction of the country. Anyway, the story goes on and says, as for Congress, only 13% of Americans approve of how it is handling its job, while 85% disapprove. You believe those numbers? I mean, just absolute low approval ratings of our congressmen and women in Washington. And you know what? You know what is so amazing is that here in just about a week, citizens from all around this country are going to go down and vote for the same people who they claim to disapprove of. That's 85% of American people disapprove of Congress. Only 13% of Americans approve how Congress is handling its job. Here's one idea to solve it. Why not vote out every single person who has been in office? Look, in other words, if you've been in office anytime prior to this election, you're disqualified. The American people say, no, we're voting new people in. If you've been in Congress, we're voting you out because we disapprove of you. But you know what? That makes too much sense. That's too logical. No, we're going to vote for the same people because they have bigger advertising budgets and because we like their jokes and because they made a funny on their particular commercial or they really landed a punch on their opponent at that last debate. We don't learn, do we? We don't learn. We just keep voting the same bozos in and keep getting the same result and nothing changes. Politicians have access to massive amounts of public polling data. They use it to craft their language before a crowd. When they go on Fox News, they say these keywords. And when they go on CNN, they say these keywords. And when they go on MSNBC, they use this phrase. And whenever they stand before this particular committee, they say this. And when they stand before this corporation, they make sure to point out this. They are fundraisers, friends. They craft their language to please the crowd. But once they're in office, they're beholden to the wishes of those who write the checks. If you think that all of Washington's political donors hand out money without any strings attached in Washington, without any expectations in return, it's time to wake up. Soon as these midterm elections are over, and as soon as we are staring at pretty much the same thing, they're talking about a Republican upset, a GOP upset. Well, we'll see. We'll see about that. And if it is, we'll see if anything changes in Washington. We'll see if that approval rating just starts climbing higher because now suddenly everything is different. We'll see. We'll see, won't we? We'll know in just about a few months if everything suddenly improves. But you know what? After this midterm election is over, after all of these elections are finally over and all these yard signs get thrown into the trash where they belong, then the media is going to come after you with a really big stick. This is going to be for the 2016 election. Now it's going to be a real nail biter. Who's going to win? Is it going to be Hillary Clinton for the president? Or is it going to be Jeb Bush? Real nail biter this one, huh? Which one's it going to be? Well, on one hand, we're going to get one form of government, and on the other hand, we're going to get another form. Come on. Who are we fooling? You know, I tell you, I'm not so sure about this Jeb Bush thing. I got to be honest with you. I'd be very surprised if it ends up being Hillary Clinton versus Jeb Bush. I mean, that Bush name has been dragged through the mud. George Bush Jr. was a disaster. And if you want proof of that, where is he during these midterm elections? If he is such a great, mighty leader, then where is he? Why do people not want to see him? The same reason they don't want to see Obama, right? Because they don't want to think and remember about how bad things were during that time. So I just don't know the hopes of a Bush getting back into office. His daddy, Bush Sr., if you want to read a book that'll blow your mind, read The House of Bush, The House of Sod. You want to find out how corrupt, I mean really, really corrupt the Bush family really is. And if you're really going to put down your GOP glasses just for a minute to read the book, and you can stomach it, then you really should read it. Because you will be shocked at the truth that is found in that book. Unreal what we know about the Bushes and the Saud. So I'm not crazy about another Bush getting into office. Now the Saudis are. They'd love to see old Jeb Bush roll into office. Nothing they would love more. They hate Obama, right? They would love to get another Bush back in the White House. And so they're going to be pushing for it, right? And pretty soon they're going to try to co-opt you. So you're pushing for it too, right? Because you need to be for what the Saudis want, right? That's exactly how they view things. I don't think it's going to be Bush, though. I think that Hillary Clinton is going to face off with Rand Paul. Now, you know that in 2012 and in 2008 and in the past, I have been supportive of Ron Paul. Not because of any particular political persuasion that I hold. It's not because he's a Republican. It's because of his ideas. I don't vote party line. I don't consider myself a Republican or a Democrat. I think that all of those labels are silly. But Rand Paul is not the same as his father. Very different. And I have some serious concerns over a Rand Paul presidency, which we might talk about later on in this program, in a future program. But I am going to go ahead and go out on a limb here and say that it's going to be 2016 Hillary Clinton versus Rand Paul. Now, things could change during this time. We'll find out. We'll keep our eyes on things. But I tell you what, if it's Jeb Bush and Hillary Clinton, I think I'm going to buy a little rowboat. I'm going to put my family in it. We're just going to sail for Mexico, We're just going to row to Mexico because down there, it would probably seem a little bit more sane. I can't stomach another Bush or Clinton in office again and still call this place a democracy and still call it some sort of representative democracy. Come on, right? Come on. That's silly. The media is manipulating you. The politicians are manipulating you. And the Federal Reserve and their cronies and the banksters are deceiving you. One day the world's going to wake up. And when they do, they're going to realize that this entire thing was one big house of cards. And they will rush to the safety of hedges, investment hedges such as gold, silver. They'll be rushing towards other hard assets that cannot be printed. Anything that cannot be printed, people will be buying. And on that note, let's head over now to our good friend Tom Cloud. He's here with an update on precious metals. He's here with his precious metals market update.
Follow the Money Weekly presents your precious metals market update. Here's Tom Cloud.
While the markets are still trading in a very neutral zone, there are a few points I wanted to make this week. I want to start by talking about Russia's purchase last week of 37 tons for over $1.5 billion in gold, and we continue to see gold moving to the east from the west, and the Swiss initiative that I brought up last week continues to, this morning, show that there are more people wanting Switzerland to back their currency with 30% gold, and this money is flowing in for this Switzerland initiative on backing the Swiss franc with gold, and we think it's got a very, very good chance of passing on November 30th when they have the referendum. Interesting enough, Switzerland has also started bringing their gold, a place that is famous for storing gold, actually because of the National Bank of Switzerland. Their gold was primarily stored in England, or more specifically London, and they have requested to get back. They got back 63 tons of their 200 tons that's being stored in London. So it makes you really think how crazy it is that the U.S. in January of this year could only send back Germany 6 tons of gold when they owed them something like 35 or 40 tons they were supposed to pay them on that January date. So it just continues to show us that we know the U.S. has leased out our gold, and we probably don't have any that's physically there. We have paper that says that people owe us gold, but that's not going to do us any good in what we envision as the new world coming financially in the next 2 or 3 years, with not only Switzerland having a gold-backed currency, but certainly Russia and China. That's a lot of talk and proof they're moving very quickly to go to a gold standard before the end of Obama's term. The other thing to watch this week is going to be the Federal Open Market Committee meeting that will end Wednesday with the Fed's meeting. And a lot of people think they will go on and announce they are going to cut some more off of the $35 billion a month they're still spending to buy mortgage-backed securities, down from the height of $85 billion a month, but it's still printing money and devaluing our dollar long term. But if that is the case, certainly gold and silver both could test 1180 on gold and 1650 to 1680 on silver. On the other hand, because the world economies are sinking so fast that if we give any kind of dovish remarks, Yellen does, then you can expect our markets to move right up. And we think we could even see gold at $12.49 on the 50-day moving average, and then test the 100-day moving average up at 1278, 1279, right in that area. So Wednesday will be a very, very interesting day as people watch to see if it's going to dip down and have a triple bottom around 1180 on gold and around 1650 to 1680 on silver. And of course, if there are dovish remarks, those numbers will be gone very quickly to the upside. And then I want to talk a little bit about the gold-silver ratio that, as I record this, is at 72 to 1. And only one other time in history has the ratio been that high where gold is 72 times more expensive than silver. Something must be going because we're having a lot of clients that are trading gold for silver that are taking different timing services that are telling them the yield's getting ready to go back to around 55 to 1. And what that usually means in my world is they know of a major country making a major purchase. We hear about it all the time in the gold market, but you don't hear about in the silver market very often about these major purchases. But the rumor out this morning is that with gold at $12.50, which is only $20 higher than it is right now, if you divided $12.50 by 55, that would put silver at $22.75, and with silver right now at $17.25, that would be over a 30% jump in silver, while gold was only going to go up 2%, but it would get it back in line. We've seen ratios certainly all the way from 8 to 1 all the way up to 72 to 1, but the most common one has been around 55 if you divide the average since 1971. So we do think that is going to happen at some point. I'm not sure it's going to happen right away, but I can tell you, as a dealer that's done this for 38 years, there are a lot of people that are betting on silver making a big jump in the near term. And once again, if gold went from $12.30 to $12.50 and you divided that by 55, that would put silver at $22.75 and be a 33% increase from where it is right now at 17.25. So some of you that are real heavy in gold might consider doing that. We can sell your gold at no back-end commission and move it over to silver if that is something that you're interested in. On a positive note, both palladium and platinum are having a very good week and have opened up strong on Monday and going up. We see now palladium back testing the 800 level, and we see platinum back testing this 1270 level. So things are getting more interesting, and I think once this referendum goes by November 30th, we'll continue to gain footing and continue to see this going up. And yet, on the other hand, you got to remember, when you're buying metals, you're buying them in dollars. And you were on the other side of this phenomenon from 2000 to 2013 when the dollar was going down and gold was going up in dollars, but down in euros. But now we've got the opposite. So gold has been a hot commodity in Europe because they're actually making money in the currency they spend, the euro. Dollar's been going up, the euro's been going down. Gold's been going down in dollars, but up in euros. And certainly with the amount of money we've printed and the problems we have that haven't been dealt with yet, when it does turn, you're going to see gold and silver both fly up. But there is still bad news in Europe, and you may see the dollar gain a little more strength before it turns back down. For ones of you out there still holding rare coins, we continue to urge you to give us a call and get out of those because this next move up is going to be in gold bullion and not rare coins. There's no way rare coins are going to move like bullion when this next move happens. If you have any other questions or want to discuss anything today, you can reach me at 800-247-2812. That's 800-247-2812. If you're not getting our email blast, you can go to FTM Daily and hit the Precious Metals button and sign up. And we don't share your email with anyone. It's completely confidential. And then for several of you have called this past week about getting a self-directed Precious Metals IRA, we can walk you through that, how to roll part of your 401k if you can, or just roll it from one place to another as the stock market continues to look extremely scary. And Jerry's alert over the weekend was very timely, in my opinion, as we continue to expect that to go down. And lastly, for quite a few Christians out there that have called me about the mystery of the Shemitah, the New York bestseller written by Jonathan Cahn, I've read over half of it on the weekend. I probably have had 15 calls or emails about my opinion of the mystery of the Shemitah going back 3,000 years to God's meeting with Moses. So I think it's incredibly, if you don't believe in coincidence and that God has a timing for everything, you really need to read this, especially if you're in the stock market heavily. But I'll report a little more on it next week, in my opinion, since we're getting so many calls and emails from Christians that are asking my opinion on it. But I do think each one of you is a paperback that's $15 or $16 on Amazon. It's a fascinating read, and certainly it's history. It's not an opinion. But as I said, I've read about half of it. With this week's Precious Metals Market Update, this is Tom Cloud signing out.
Hey friends, this is Jerry Robinson from Follow the Money Weekly. Recently, we have been receiving many emails from our listeners commenting on the great help they're getting from our precious metals expert, Tom Cloud. Gold and silver are excellent hedges against the growing threat of coming U.S. inflation. Who's your gold guy? Make it Tom Cloud. With over 30 years experience with precious metals, Tom will answer all of your questions. Don't buy your gold and silver through some call center and pay inflated prices. Call my good friend Tom Cloud and speak directly with him and get all of your questions answered. For a limited time, Tom is offering free shipping and insurance on every gold and silver purchase made by our listeners. Call 800-247-2812. And when you do, tell him that Jerry Robinson from Follow the Money Weekly sent you, and he'll throw in that free shipping and insurance on your entire order. Call your gold guy, Tom Cloud, right now for the very best deals on gold and silver coins. 800-247-2812. That is 800-247-2812.
Welcome back to Follow the Money Weekly. And here's Jerry Robinson.
All right, friends, so that brings us to the end of our program. Thank you so much for choosing to allow us into your life each and every week right here on Follow the Money Weekly Radio. And as always, I leave you with this final word, this time a startling report by the Institute for Children, Poverty, and Homelessness. 12,000 families, according to this report, are currently sleeping in shelters, including 24,000 children in the city of New York. The report goes on to say that homelessness in the Big Apple has skyrocketed by 250% over the last 2 decades. But in reality, the city's homelessness problem is far more dire because many homeless people and families don't end up in shelters. Additionally, the number of homeless children in New York City is growing like an epidemic. According to school records highlighted in the report, close to 80,000 children have experienced homelessness over the past 12 months. Overall, the city had 77,915 homeless students in the 2012-2013 school year. That's almost double from what the figure was just 5 years ago. This trend is real and it's accelerating, friends. I know that there are broken homes and broken families and homeless children all over the world today. But tonight, I want you to think about and pray for the children of New York. Being an adult today sure is hard, but imagine being a homeless child with no adult that you can turn to. That's very hard. We'll keep each of them in our prayers and thoughts this week. Just something to think about. Remember, friends, when you want the truth about the global economy, just follow the money. Have a safe and prosperous week, and we'll see you right back here next Tuesday. Till then, God bless.
All of the information contained on Follow the Money is strictly for informational and educational purposes. The views and opinions of our guests and sponsors, including Tom Cloud and Jay Peroni, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry and Jennifer Robinson do hold their insurance licenses and may offer consulting on life insurance and fixed retirement income products. Jennifer Robinson is an investment advisor representative with Faith-Based Investor, LLC. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial